Alright, so I'm going to run through my 2022 model of the ICT 2022 model. This is how I've been trading it. I've had success. It is October 24th, and as of today, I have passed my 50K Topstep challenge. I've had payouts from it, and I'm currently working on the 100K account. But I thought I'd just run through some things and put things out in a video so that I don't forget and I can look back at this and see what was working and what isn't. So I wrote out a little checklist that I run through in my mind typically, and it seems to have a decent enough win rate. It's just a matter of, do I let it play out and do I wait for the correct liquidity to be swept? Because I think that's so key in all of this, is waiting for the liquidity to be swept and knowing which draw on liquidity is being reached for. It was very difficult for me in the beginning. I feel a lot more confident now knowing which ones to look for. So to start out, he says you don't need a daily bias, but I think it does help. And maybe not every day you will have a bias, but there will be enough days, maybe 2 days a week that you have a bias. The other 3, maybe it could go either way. Today I had a bias. So real simple in the beginning, we can just go to the monthly chart and see where we're at. Okay. Ran up, dropped, ran back up. Caught in here. We're pulling back. We're in a fair value gap, so it's actually catching in a long fair value gap for the month. So could be a long though. Could push back up, or it could drop. I mean, there's a lot more strength to the upside in my opinion. We got fair value gap, fair value gap. Could run, but it did catch in there. So we'll see, but that doesn't show us a whole lot in my opinion. Here, I don't see a whole lot of anything I really like. A little small fair value gap. So if I can't tell what it is in the beginning, what I used to do a lot is just look at the color of the candle. So here we got a green candle. So the week is bullish as of now. Something that you can see here though is we had equal lows and we just took it out. So we took liquidity. Well, there's a good chance that it's turning around to go to an imbalance or opposite side liquidity then. So we're bullish on the weekly. Let's look at the daily. We got a gap here, volume imbalance. There's that equal lows. So you can see we took that out yesterday and rejected it. Pulled way back up into here. Entered. We closed within this previous bar. So definitely good reversal potential. And this was today that I traded. It's after 6 o'clock, so this day is opened. This is today's trading though. And I took all bullish trades. That's what I was aiming for. Even though there were some bearish ones that worked out and I spotted, I was trying to just take the bullish trades. Those are the ones that are going to run more, be more in your favor, especially as a beginner. I think that's what to focus on. So then, I normally don't do a 4-hour chart, but I will drop to the 1 hour to see what is going on. And this is all optional according to ICT for the 2022. Kind of like a silver bullet. You don't have to have daily bias. It just improves your win rate and your understanding of where the market is and why it's doing certain things. So we can see we ran down. There's that. Let me thicken this up. There's those equal lows. Took it out. Rejected it really hard. Look at all them fair value gaps. Real strong move. Displacement. Pulled back into a fair value gap. Now we're running up. Well, we're going to have to run this high That's what we did today. Then we dropped, grabbed more liquidity, then ran it all again. And this is where we're at. So the 15-minute is where I start framing my trades typically. You can use a 1 hour, but typically it's the 15-minute chart. So I have major liquidity marked. What does that mean? There are the kill zones that ICT trades. So let's just mark out the times that we're focused on. So the morning session is 8:30 to noon, and then from 1, and I go till 4 because I trade at Topstep. They close your positions out at 4 or whatever. This guy's off 12 to 1. Okay, need one more of them. There we go. So these are the times we're interested in, is this morning session and then the PM session. So 8:30 to noon, preferably like 11:30. I'd like to have an entry and then be writing it out through noon if that's the case. Or through 1. You can hold through the lunch hour. It's just you don't want to be making any entries, is what ICT recommends. And then same deal in the afternoon. You want to be entering and have an entry, preferably 2:30, 3 o'clock at the latest, writing it out that last hour before the market stops at 5. But I'm going till 4 because that's the end of the market for me, because I have to be done at 4. So instead of marking this out every day, you can just use an indicator. There's many out there. One that I've started using, which is, I would say, too complex for a beginner, but get a few weeks of experience, maybe even a few months. You can go to Kraken, Silver Bullet, ICT Kraken on YouTube. I'll put a link in the description. But he has a free version of this as well as the paid version. This is the paid version. And it can be as complex or as simple as you want it. So he's got all the sessions marked out that you can put in shade. But the big one is he marks out the previous day highs as well as all the session highs and lows. So I use this one typically. I'm probably going to end up making my own, but I can see what the session high and low was, and then I can see when we hit it. I'm going to turn that off for this video because this is supposed to be simple. What I am going to turn on is the very first one I use, which is really simple. All it's doing is shading the different sessions. So if I get rid of these lines, and we go into this, you can see we have the different sessions here. Asia session is from 20 to midnight. This is all Eastern time. So that is 8 o'clock to midnight. London session is 2 a.m. to 5 a.m. The AM session for the New York is 8:30 to noon. Then lunch is 12 to 1. And the PM is 1 to 4. If you'd like, you can put the highs and lows. That'll automatically draw them out for you. We're going to turn them off because it draws them from yesterday. There's some better ways of doing it, as well as it adds a day of the week label, so you can see at midnight it puts the day of the week. So we just started Tuesday, and then you can also add timestamps. So here I'm going to add the midnight timestamp, and it'll put us a nice dotted line at midnight. So we can see that that's midnight. So now the major liquidity marked is going to be the first one. So we're on a 15-minute chart, so we can scroll through the days easy. The first one is going to be yesterday's high and low. So we're going to find the lowest price from yesterday and the highest price. We'll go ahead and make that black. There you go. That's the highest price. That's the lowest price. Those are two big points. If we just go back to a daily chart real quick and we look at these candles, we just follow some real simple trading logic here. If this candle is black, here, let's just replay. Okay, we have a black candle. So if we just had to make a bet just off this and we knew nothing, this was our first day of trading. If we learned that what the colors mean, that this is a down candle and this is an up candle, logic would tell us that the low of this candle is more likely to be taken out than the high. So the next candle should be a down candle that takes out the low, is what we would expect. That's what happens. Same deal. This guy, he's a down candle. We would expect the low to be taken out. This is just like you got to add all these small little details in to improve your win rate, to improve your edge. And this is a simple one. There's way more advanced ways of looking at this. Like if this closed below this low, that is a higher, it's a stronger push in that direction. So here, see how this guy closed below the previous one's low? We would likely see this low taken out. Does it again. There you go. That low got taken out too. Now we got a green candle. So it looks like potential reversal. We're going to expect the high to be taken out now. Look at that. That's what it does. Okay, we didn't close above it, but we do have a green candle. We have more potential to the upside, but maybe it doesn't reach all the way up there. And that's where we're at. We'll see what tomorrow brings, because this candle's still in play. That's what I'm doing though. On a daily level. So we can see that this was that up move. So we're expecting the high to be taken out at some point throughout the day. So that's a potential target. But you also mark, I like to trap the trade. So I like to have liquidity above and below marked out. So I can see where is price going to run to, turn from, where is the algorithm taking it, where's the institutions loading up. That's what I want to know. So you want to look on the 15-minute chart, I think shows it best. And we are going to, let's just go back to midnight. We'll just run through today what I saw. So let's say I got on at 2 a.m. Boom, there's the 2 a.m. open. What I would be looking at is yesterday's high and low is the first one. You can go watch ICT's Silver Bullet video. He's got a list of like 6 to 8 things to look for on major draws of liquidity. Another one is the new week opening gap, which you can see is right here from Friday to Sunday. What is our opening gap? So it's down here. We could even mark that out. Let's go ahead and do that. We'll just leave that there. See if price draws it. Let's change colors on that to teal. Then the other ones that he says is previous sessions. What is a session? A session is all these kill zones. And this is my opinion. You can do with it as you will, but this is what works for me. So the London session is what we're in. Go to the Asian session. That's the previous session. we're going to mark out the highs and the lows of that session. So let's grab a blue and we will make it a little smaller. You know, as we get down in intensity, we're going to shrink our lines. So our daily big stuff, that should be our biggest, and a session that's still strong, but it's a little weaker. So I would draw that out. I like to draw out the previous 2 to 3 sessions, especially if they haven't been hit. So I'm going to go ahead and draw out yesterday's PM session low as well. So we got liquidity down there. And then we've already got the high of the PM and the major low down here marked. So there's no reason to go back any further than this. We've got the previous 2 to 3 sessions marked. They're taken. Now, if liquidity ever gets grabbed, if price ever runs through any of those lines, you can get rid of them. Liquidity has been grabbed. So we're going to get rid of this line because the Asian high has been taken. The liquidity, the stops that were resting above this, which probably weren't many, it's been grabbed. They got a rate on stops right here. So we'll see what price does. See if it runs back down. Look at that. So it ran. We would expect price to turn back down. What's it going to run back down to? A typical price for the London session, if you don't know how the London session works, is it normally takes the higher, the low, the Asian, and then it runs back to midnight. That's exactly what it did. And then who knows what it'll do after that. Okay, the London session is over now. There's your 5 o'clock candle. So, same deal. Mark out the high and the low of the London session. That'll work. And you see how we're just squeezing this down more and more? This is what I call trapping the trade. We've got all these liquidity levels we can go off of now, and it's getting smaller and smaller. And you're gonna take a trade towards one of these, but in the beginning, I would not trade the London. I would wait for that 8:30 a.m. session. So we'll wait for it. There's 8:30. Okay. So now we're gonna wait. Right here, number 2. Number 1's done. Now we're at 2. Wait for the liquidity sweep. We want a major liquidity sweep. We're just trading the New York as a beginner, especially the morning session. So wait for one of these to get tagged, which is pretty simple. You can do this, set an alarm or an alert. Boom, gets tagged. What's the next thing? Wait for a market structure shift, MSS, market structure shift with displacement. It's got to be with displacement. Or to me, it's not a market structure shift. So if I'm looking on the 15-minute, you're going to drop to the 1 minute. And we can go ahead and look at this one. So there it is. It tagged it. Where's our previous swing low? It's right here. So we would need this to be ran through pretty hard for us to get into this. What happens right there? Market structure shift. Big bar. Closes below it even. There's your fair value gap. So we had liquidity grab, major liquidity grab. That's a significant level, the London highs. Then we had a market structure shift. Now we have a fair value gap. Look for fair value gap. Enter when price enters the fair value gap. We'll just place it there. Just looking for an entry. There's the entry. Okay. Where is your stop? I like to place my stop bare minimum above the highest level of the fair value gap pattern. So what is the fair value gap pattern is a 3-bar pattern, bar 1, bar 2, bar 3. What is the highest level of that? It's right here, whatever this is, 2250. So we are above that. Oh, I am definitely off. It says 2250. Oh, right here, I see. I was looking at this. That was off. Okay, so that's where I would place my stop. And then I would place my low, or my take profit. This is up to each person. I like to go to that 15-minute chart that we framed it on. If we go back out here. And I will draw an equilibrium fib from the low to the high of the range that we've been in. And I'd be looking for this price. Definitely be out somewhere in here, below here. So 90. Let's drop back to that 1 minute. So you can see right there is our range. Our actual range is further down here. Oh. Technically speaking, it's down here. But there's multiple places you can target. You can target the midnight. You can target the current range you've been in, most recent range, which is this major swing point to this major swing point. You can target on the 1 minute a swing low to be taken out, or a more major level. This session isn't over, but this is the current session low, which is significant. There's probably stops placed right under here, so that's a good point. So we'll just leave it there. What's that put us at? 1.12. That's fine. You don't have to have a high risk to reward to make money. But officially, you're targeting these. You're targeting the Asia low. You're targeting, yesterday's PM low. Even right here, you got the London low. You're targeting that is what's really going on. But it's just how far you want to hold. So right there's your TP. I bet you it turns around a little bit because what did it do? It grabbed liquidity down here. Like I said, the stops were down there. That was major. Or I call it minor because the session's not over. It's more impactful when the session finishes, and that's set in stone what the low of that session was. But that is still a minor level. It was the session low for the time being. And we'll see what happens. If you let this go, you would have got stopped right there. And if you remember what my daily and weekly bias was, it was long. So I wouldn't have even wanted to touch that. So now let's go back. I've got too many lines on the chart, so let me start turning these off. And if you remember, I said if we take a level out, delete it. So we took that high out, boom. You could have took profit there, for sure. There was all kinds of money to be made there. Now we're going to wait again for what? A major level. So we got to wait for one of these lines to be tagged. Oh, we got another line tagged. That's another short setup on a long day. It's not the highest quality, but let's check it out again. Boom. We're looking for a market structure shift. It would be right here, but then this low formed, so it's right here now. Let's see if we get a shift. Okay. What does this say? We'll continue to go through the checklist here. Look, wait for market structure shift with displacement. But the fair value gap that you want to trade, you're looking for it in the leg of the market structure shift displacement. So this whole leg of price from high down to the market structure shift, the market structure shift is when it crosses here, preferably closes below there even. But this whole leg that it did, that's where you're looking for your fair value gaps. And there might even be multiple, right here is a small one. And then you obviously have this big one. I get in at the first one just because I would rather do that, take on a little more risk, but not miss out on all of them. Same deal, fair value gap. We're going to place our short. Where would our stop loss be? Well, the caveat to this is if there's multiple fair value gaps, like this one's got another one here, you have to count that one in. You have to expect price to be pulling back to that one. So you technically, this is bar 1, bar 2, and bar 3 of the fair value gap that's right there. That little one, I can even mark it out. So normally we would have it here. This time we got to have it here. Same deal though. We can sell, we have the 8:30 open now we can use if we wanted. We got the midnight, we got the session lows. I bet you this is even stronger now because we got, almost equal lows here relative. So we'll just set it there. That's a ginormous trade. 2.7, 86 points on the NQ. Let's just see here. 86 times 20, you're talking $1,700 per contract. So there is the entry. Let's see what price does. You got to remember, we're taking a short on a day that we have a long bias. So that's not an ideal trade in my opinion, but you can still use them. There, it runs to the 8:30. Imagine that. It catches on it. It's not a coincidence. Now we're running lower. We're getting close to our noon. We're at 11:45. And there is noon. In the lunch hour, it is very typical for price to reverse whatever it's been doing. I'm just going to hit play here and we'll let price run a little bit. And there it is. If you let it go, you would have made out on that one. Once again, you had all kinds of places to get out. Where would I have sold? I take a lot quicker trades. I would have seen this bullish run that we just went on. Drew my 50 fib. And I gladly would have sold at the first fair value gap under this, taken some off. So right here, what would that have been? 1R, maybe not even 1R. Depends where you get out in here. I'm so fine with that even. That's plenty. Because with this wide of a stop, you get stopped less often than people that try and play it super tight to where your win rate, is probably closer to 70-80%. It just depends on the trade and how mechanical you are with things, and how you draw this is huge too. But I try and shoot for 1-to-1 minimum, just to keep it nice, and if it's got the potential to. Here we still have all this liquidity that hasn't been tapped. I'm expecting a bullish day. For there to be a bullish move, you need some liquidity to be grabbed on the downside. So I see all kinds of reasons for it to keep going. So I gladly would have held till probably that swing low. The whole session, that's a lot longer of a hold, but the trade did work out again. We can't deny it. So we'll get rid of that fib again, and we'll come back out here. And now, oh, I didn't even realize that. See, I could have took that trade. Why would I have been okay taking that trade? Because that was not only a session high, it really was 2 session highs because it was basically the lunch hour from yesterday and the PM. It was not only those highs, it was yesterday's high. The whole day, that was the high price. So that is a major level of liquidity that was grabbed. There's all kinds of stops. People going short here that placed their stops above that high, and they just ran it. So I gladly would have took that. We can see what's happening here. So we'll come back out to the 15-minute. You can see that I have written in my notes here on my checklist. As a beginner, just aim for 40 ticks. That is 10 points. You're looking for 10 points of profit on a mini NASDAQ. That is $200. On a micro, that's $20. You know, you can trade the micros if the minis are too much for you. It's a tenth of the value. It costs like $100 or less for a micro versus a mini that's like $1,000. But I trade through Topstep, so I don't have to worry about that. So now if we look here, you know, we're not even reading really the 15-minute chart, but you got a short fair value gap. It caught in, it filled. Look at this. We have finally ran one of our short liquidity points. We got, you know, yesterday's low, new week, opening gap, and then all these sessions. Oh, and we got one more. I mean, right there, it just ran one. That's probably close. So we just ran that one, and we just ran that one. That's some nice liquidity. So we will wait for a market structure shift. I normally don't draw my line until it starts working towards one. So you can see here. Let's see. It just tapped it, and then it rejected it. Read the candle. Read what price is telling you. So here, we just tapped it. We didn't even close above it. We didn't close near it. That doesn't excite me. That's not displacement. Even though there's a fair value gap formed, that doesn't excite me. I will gladly pass on that and let that trade go. And it doesn't matter because we're not, you know, we're still in lunch hour anyways. So that little guy failed. Some people, I'm sure, got in here thinking that, oh, it's a market structure shift. It tapped it. No. We want to see it clear that high with a strong move. That used to really get me early on. Now I'm understanding that more. So here, we got a nice strong bar. That closed above this high. I like that bar. And we've tapped into the Asian liquidity as well. So we've got 3 major levels here that we tapped into. This could turn around. Now, something I always note is when you have a big, strong move like this, let's just measure here. Just from here to here is 120 points. That's a sizable move for me. So when the market moves that strong, sometimes I like to give it a little extra time because it'll make a true market structure shift, but then it will push down a whole nother time to grab more liquidity. That's just what I've noticed. So on these bigger pushes, sometimes I'll give it extra room to prove itself. And even then, there was the world's smallest fair value gap form there of like 2 ticks. I'm not entering on that. I'd much rather wait for it to break another high and prove itself a little more. And then even then, I still need a nice bullish fair value gap, and we have to be in the right session. So right here, the PM session has started. So now I'm interested. Now I could take an entry if I find one. You know, we're not so worried about catching the very low. We just want to make sure that we took a major level of liquidity, the market structure has shifted, and then, especially on these giant days like this, you target opposing liquidity. So this is our daily high. Let me just put this up here. Ultimately, we could see this tagged. That could be our ultimate goal as of now. A shorter one I see is this session. I mean, the liquidity works the same way the other way, so you can use them as take profits as well. So we will wait for a fair value gap to form. There's one. We have a fair value gap right there. I'll draw it out quick. And we'll see if price taps in. Doesn't, but we get another fair value gap. Now, how do I know which one to get in? There's multiple fair value gaps here. Let me just get rid of my entry tool here, because this is something that tricked me early on. Well, this is where I will come back here and I will take my opposing fib, you know, my equilibrium fib, and I'll say, okay, if this is the 50 line, we got premium, we got discount. If I'm targeting a my TP is anywhere above this line, simply speaking, it's a fair value gap above this line, which is literally right on the line. Well, I got to ask myself, is there enough risk to reward? If I were to get in here, is there enough of a move to get in here or to get out here? If there is, take it. If there isn't, don't take it. So if I draw this on here, you know, and I go, okay, where's my stop have to be? Well, we got a fair value gap right here. So I got to place my stop under bar 1. Okay, we got a 15-point stop. Well, if I were to get out, if I were, and you don't have to, TP1 should really be like 10 points, in my opinion, especially as a beginner. We took out a high, short fair value gap, and, you know, that's just my go-to is 10 points. 10 points, just lock in some profit, even if it's below 1R. And this one is, it's a 0.6. I mean, people online would laugh at that, but it makes money, so don't cry about it. But does it have the potential to reach more? Why do we care about that? Because we want the market to have so much strength that it has the potential, and it's probably going to push all the way to the opposite side where we think it's going. But we don't have to hold for all that. We don't have to, you know, hold on for all that risk. Every minute, every candle we're in the market, it's more risk that we're open to. So we want to try and limit that, at the same time take our easy profits. Right there's an easy profit. I'll just do that as a simple one. What is that? 1.7. So it's not even a 2R, but let's just see if we get an entry here. We do. Now let's see if we get stopped. We do. Okay. And like I said, after a big push, you can definitely get a retrace where it will take liquidity a second time. This one I just might not have had my... Do we have another fair value gap I missed? Nope. I would gladly take that loss. And you don't have to place your loss there. If it's low enough, you can place it below the whole thing. That's what I'd really like to do, but you're opening yourself up to a good amount of risk, especially on a mini. That's a lot of money that you're losing. So if your account can handle it, great. I would recommend doing this because it's more sound, in my opinion. And you could always re-enter as well if price comes back up and is going to your price again. You could always re-enter, place your stop below that new low. It's a different trade. It's not the same trade that ICT teaches, but it is something you can do, because you'll have trades like this where you were right on how you read it, but you just got stopped out. That one flat out stopped me out. There's no way around it. You just got stopped. It's not a big deal. I normally don't take that entry. What I'll do is, okay, you get stopped there. Well, let's wait for another fair value gap to form, see if one forms. Well, what do we have? We had a small one here. What was this one? High of 32.75. So this was a little half point, fair value gap. I'm not a huge fan of those, but you can trade them. And you can also do this on different time frames, from the 5 minute all the way down to the 1 minute, is what ICT recommends for the base 2022 student. You can also go down to the 30 or 15 second. But we have more fair value gaps. Right here's a big one. Another little one here. So you could even take this trade right here. There's nothing wrong getting in on these little ones. I'm just not a huge fan of it. Oh, I got a short. So like if you did take this one, because it is very tight, sometimes it can work if you have a small stop. This is 11 points. I like that. And you're opening yourself up for more profit. It can work. It's just what you're willing to lose, really. I am not such a fan of that. I would rather see a market structure shift again, which happens here, a break of a high. So boom, we turn back down. Okay, I need to see another high broken before I'm persuaded that it's going long. I think the reason it came down so much is just how much we've been down on the day. It's ranging so much value that this was like a minor retrace, and it did take it out. But it was a strong retrace. That'll happen. So we took the high. There's a fair value gap. There's a fair value gap. You could have entered this one. Place your stop at the low. There's an over 1R trade. There's a million targets to target in here. Here. Ultimately, you're actually targeting these opposite liquidities as well. So if we just let that run, this is where I stop taking entries though. It depends what you're aiming for. I am on the tightest level here of the range. You can see generally what price has done. We came down, then we pulled up, then we came down. Technically speaking, this is a range as well. So if you want to aim for this high, you can do that, and you can get in on these trades. Like right here, we could be taking this big fair value gap that formed. You could take this, here. Where would your stop have to be? Well, you got another fair value gap, so it would have to be under there. And you're at a 26 point stop. Could do it. Look at that. You're at a 3R, 4R trade. Looks like it come close to stopping you out before it runs higher, Now what's happening here? We just took the lunch highs. That was TP1 ultimately for us. But we just took the lunch highs. So now, logically speaking, we would expect what to happen? Well, a pullback, right? A reversal. So we'll see if there's some downward price movement. It is a market structure shift right here. It does shift, and then it blows through it. When this happens, boom, it should be good. It should push long, and that's what it did. It pushed through. Then you can see right there at 4 o'clock, it hit our TP, the ultimate TP that we were aiming for. 97 points, risking 26. There are trades there, but this is how I do it. I'll let you decide how you want to draw, what points you want to go off of for your premium discount array. But I like this. It's very simple. There's one line there. OTE, I understand. I do like OTE, but I think the big thing with ICT students that I've seen online is, and just myself, is there's so much information that you get caught up in too much information. You get analysis paralysis. There's too much going on. You're learning too many different PD arrays. You're trying to do too many models, where if you just stick to one model, you can make your own model even, but stick to one model and a few PD arrays that come naturally to you. For most people, it's a fair value gap. It's very easy to spot, even as a newbie. I like order blocks as well. Didn't talk a whole lot about them, but I do use them for entries. They're very useful. And then basic liquidity. Basic premium discount. That's so simple. Connect it to two major points that stick off the chart to you. Where does price change direction here? If you can't tell, then maybe sit out. Maybe wait. But I really like trading these major liquidity levels. This price took 1, 2, 3 major liquidity levels. There is a good reason to believe, and in the daily and the weekly, I believe we're both telling us long bias today. So that was the ultimate trade that I was waiting for the day. I didn't even take this one. I don't think. I took the morning trades that were a little more aggressive. But this was the ultimate trade. And if you simply waited for it and placed alerts on all these, okay, you would have been sitting from 12:25 and your entry would have been less than an hour later, 40 minutes later. You would have had to sit and watch the market for about 40 minutes, get your entry, place your stop, place your TP, and close your program if you really wanted to. It was a simple day to be had there. And something else I'd like to show is, look how price consolidates around that 50. Don't think you have to aim for this and this. Sure, you can do that in the future. Something I like to do early on was I would buy my micros. Then there's not as much risk on the line, and then I can hold, sell half here and hold a few more for some higher, take profits. That way I can leave a few on as runners, and I'm not risking so much money. I took some off the table. If I'm only buying one mini contract or two mini contracts, I have to be kind of like all or nothing. And that makes it a little more challenging. If you trade the micros, which I recommend people to start out with, then you can hold for some of them bigger moves with one or two contracts. It's not as big of a deal. If they come back to break even, I don't recommend moving to break even very often, especially as a beginner. You just don't know what you're looking for before you move it up. But you don't have to hit all these. There's still plenty of profit to be made, even if, okay, you got stopped on that one. Okay. And you got your entry here, I think it was. Or is this right? I think this is what it was. You still made money. You still had about a 1R. You could even reach into some of that premium if you really want to. Get a higher R. Maybe you do have a minimum R trade. Me, I like looking for around 10 points. Unless it's a very large day. Today was a large day. I think 150 point moves are pretty sizable moves for the NQ. I know it's been happening a lot recently, but that's a sizable move. So I'm alright holding for closer to 20 points for my first TP. But that's the main thing. Draw out those major level of liquidity and that is the major things. You can see this is the default. I'll have to go set up my times again. That's all I got, folks. Thanks for watching the video. If you enjoyed it, like, subscribe, and there will be more in the future.